All right, everybody. Ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar. As usual, if you have a look at your webinar interface, you can see that small questions box, and I would really appreciate if you could give me now a very short yes or why in that box to just tell me that you can both see the screencast well and that the audio transmission is working fine as well. Perfect, everybody. Thank you very much. Really appreciate it. Through the course of today's webinar, if there are any questions, please make sure to let me know and do my very best to answer those questions as we move through the webinar. Today's session, as usual, is scheduled to run for about half an hour. And of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them and make sure that you're comfortable with them. Essentially, this says that trading involves risk and that you should understand those risks and the risk associated with the instruments you're using before you are getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live section of today's webinar. We will be looking at the markets together. I tell you what I see on those charts. I don't know what's going to happen in the future. Nobody does, and I don't have a crystal ball. I wish it was so, but it isn't. And for that reason, the only thing I can do is tell you what I'm seeing there and the way I would be trading those markets potentially. In the end, it's your money. You've worked very hard for that money, and only you have the very best interest of yourself and of your money. And for that reason, you have to own that trade before you put any money on the line. So please make sure you're okay with this. And that being said, we have, of course, the risk warning from Nadex as well. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purpose only and should not be considered an offer or a solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indices, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to regulatory oversight by the CFTC. That being said, let's have a quick look at today's agenda. Our regulars know that agenda now by heart, and therefore we just go through it quite briefly. You want to see a trading strategy. You want to have a strategy when you approach the markets. Just looking at a chart and thinking, I could be buying, I could be selling. That's not a proper trading plan. That's not a complete trading strategy. And you should have a complete trading strategy, because only that strategy can give you an edge in the market with your trading and consistency. And consistency is what you desperately need when you're trading, because you never know if that next trade is going to be a winning trade or a losing trade. You just don't know. I mentioned that I don't have that crystal ball, and this is why I don't know if it's going to be a winning trade or a losing trade. The only thing that I know with my strategy, if I execute that strategy flawlessly, that I should have more winning trades than losing trades, and that my winning trades should be bigger than the losing trades. And those two factors combined, this is what gives me an edge in the market and which makes it possible to have a consistent income from trading. Of course, you need experience to apply those strategies flawlessly, but without having a strategy, essentially, it's just gambling. And you don't want to be gambling if you can have an edge, because if you compare it with the casino, this is what a good trading strategy does for you. That trading strategy suddenly turns you into the house, into the casino. It gives you that small edge, which in the end should be sufficient for a very nice and decent source of income and trading style. Now, that being said, we're looking both at long and short setups. We want to be aware about what the market is doing. One of those market events coming up over the next few days definitely is the second round of the French elections. So keep that in mind if you want to hold any longer term positions. And as usual, be aware of the news and what's hitting the market. And apart from that, we think we get all the information that we need when we're looking at the charts. And this is what we want to do next. So let me just bring over my charting platform here. And today I want to have a look at two different kinds of markets. The first one is the loonie, the US dollar against the Canadian dollar. And then we want to focus again on our indices, the S&P 500, the Russell, and the Nasdaq. One of those is definitely looking quite differently from the others. And yeah, we want to focus on that one. Now, let's have a look at US dollar against the Canadian dollar. And once again, we're starting here on our higher time frames, and we want to see what the market has been doing there. And let me just quickly zoom out here a little bit, grab my horizontal line tool, and start to draw in some of those levels where the market has been, or we see touches of that level here, here, and here. We see touches of this level here. And yeah, putting those levels on the chart essentially is really quite easy and straightforward. You just pick that line and you put it where you think the market has seen some action. And here, once again, we see a pretty nice touch here. For this one, we could move the line a little bit higher. Here we see definitely action around these quarters here, here again, and here again. So definitely we can already start to identify that the market has been in some kind of trading range here pretty much since, yeah, pretty much for 1 year now. And now see just what happened here on the monthly chart, just within, yeah, the few days, with those 2 days of May that we currently have seen. We're definitely trying to push out of that trading range. And let's have a look at the lower time frames to get a clearer picture about what's going on here. I've put some different levels also here on that chart. And once again, you can see that this narrow trading range where US dollar, Canadian dollar has been definitely is much more apparent here. We have a wider range consisting of those two lines, and we have a more narrow range here. And within April, we definitely have pushed beyond this line and have tested now the outer limits and outer levels, and we have pushed now beyond again. And we're sitting now on the weekly chart definitely above that trading range. So the idea is if the market is pushing higher, and we can see that we're getting here some good strong momentum here, both in MACD and RSI, as we have tested this level once and twice. And what we're looking for here, let's make this a little bit larger so that you guys can see what I mean. At the point in time where, and I'm never using the trend line tool, that's why I have been searching for that one now. We had a test of this level here. And if we go down here, we can see this is where MACD had been trading at that point in time. And if we go to the second test, this is where MACD had been trading there. And we can start to see that we clearly get an ascending trend line here, which means as the market has tested this high again and is about to break out to new higher highs, we can see that we can get good confirmation here. Looking at MACD, looking at RSI, we get convergence on the breakout. And sure enough, we got a strong breakout. Price is continuing higher. And as we're making new higher highs now, we're also seeing definitely new higher highs here in MACD and RSI. Using convergence and divergence is the leading indicator. So here on the weekly chart, this already suggests that the market definitely has some good momentum and is pushing higher. Let's have a look here at the daily chart now. And you can see that the market clearly has left that trading range. And remember what we want to see in good, strong trending markets. We want to see our fanning pattern. We want to see that the 10-period moving average is well above the 20, the 50, the 200. And all this is what we're already getting here right now. We already got it on the way to test this level and to break above this level. Now this has happened, and we're definitely sitting on top of that level. Now, looking at the daily chart, the most desirable setup that I would be waiting for here would be a little push further into the upside, and then the market could start to come back and test this level. And if we get a small bullish candle setting up here just on top of this level, and all this happening then within our moving average buy zone, the area between the 10 and 20 period moving average, this could look like a very nice and decent setup. And so the loonie currently definitely is on my stalking list, especially for that reason. Every time that I can use a level within my setup to protect my stop loss or just on top of that level, this just adds further icing to the cake. This just ups the probability for a potentially successful trade outcome by quite a bit. We never know, it could be the most perfect setup and still it's a losing trade, but it doesn't matter because I know over a large sample set of trades, yada, 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 same story all over again. It's not about one trade, it's always about many successful many successful trades, and a trade is not successful if it's a profitable trade. A trade is successful if I have executed my trading strategy and my rules flawlessly. That's the major mental thing that you have to get right in your brain. And I know this can be freaking hard because every other job that we have, we are always judged by our results. Did you close that contract? Did you sell the package? Did you, I don't know. It's always, you did your task. How well did you do your task? I can immediately see the result. And as a trader, we can't apply that logic. As a trader, we just can say, okay, I executed my rules flawlessly. I played this, I traded this setup to the letter, to the rule book, and this is why it's a good trade. I don't care if it's a winning or a losing trade, because I know that over a large sample set of trades, I will have more winning trades than losing trades. You have to detach yourself from the trade outcome. It sounds way more easier said than done, but that's just, that's at the core of successful trading. You have to apply your rules flawlessly. And having those horizontal lines here in the setup definitely is part of of my rules. If I get those, I'm really getting excited about potential trading opportunities. Now, what we can do, what I often like to do, is using my Fibonacci retracements from potential low points to current high points, and I'm just looking if there are some clusters there, and I'm just putting those Fib retracements here. And now you may ask, Philip, why did you pick exactly those points? And let's make it a little bit larger so that you guys can see what I'm doing here. Of this move higher here, this has been a low. I think this was also a low, and we could argue, but I think this might qualify as a low as well. And now what I did is I just picked the most recent low in this move higher, clicked there, picked this as the swing point low, picked the swing point high, and applied my Fib retracements from the most recent swing point low to the swing point high. And this is where I got those Fib retracements, which you can see here right now. And very interesting, the 50% Fib retracement is sitting just on top of that level, which personally, I think if the market starts to decline now, that a test of this level here just has become more likely. Statistics show that that retracements, and not only retracements, but retracements that then continue in the original direction of the trend, very often take price to this area between the 50% and 61.8% retracement. And again, just like the indicator convergence that we saw before, this is a leading indicator. If I assume that this is the swing point high, I can already apply that Fib retracement study. And this means I don't have to wait until price starts to retrace and hit that level. I know in advance that if price moves to that area, that it could be becoming interesting. Now, I not only applied the Fib retracement from the swing point low to the swing point high, but also from the previous swing point low. And the idea here is I want to see clusters. I want to see that certain levels of Fib retracements start to sit on top of each other. Not perfectly done here. Usually for that retracement, I'm looking for a cluster of the 38.2% retracement with the 50 or the 61.8. It's now very close to the 61.8. I would definitely have preferred if it was sitting just on top of the 50 and the level. But in general, again, it's sitting here in that area. So if I get a pullback, and let's try it like that, if I get a pullback here to this area, somewhere, something like that, I might be interested. We have to wait and see. And by the way, it could have pulled back then, just assuming that this is now the swing point high and we'll start to see a retracement. Why do I think we could get a retracement? Well, we are overextended from a moving average buy zone. And yeah, a small correction wouldn't be something unexpected. And by the time it could pull back here, then our moving average buy zone also should have catched up. So if we get this setup here again in a moving average buy zone, this might just sweeten the deal ever so slightly again, stacking the odds in our favor. We have the uptrend, we have the FIB clusters, we have the retracements, we have the level, we have convergence here, good convergence here, both in MACD and RSI. And all those things coming together could possibly stack the odds that if we get a setup here, that this could be a potentially successful outcome and trade. All right, so that's the basic idea here. Now, of course, the question is, we're looking at this now just on the daily chart. How could this be tradable also on lower time frames? And for that reason, we agree that we have seen the breakout here, both on the monthly, the weekly, and the daily. The daily clearly is a very strong uptrend. And also on the weekly chart, the moving averages have started fanning 10, 20, 50. So all is really nice and going in that direction here. Looking now at the shorter time frames. And here we can see clearly an uptrend on the 8-hour, 4-hour, 2-hour, and hourly chart. On the hourly chart, we are definitely overextended. Now, we could move here from the hourly chart to a 30-minute chart. And you can see that we are also overextended here on the 30-minute chart. Now, let's assume that you're looking here at the 15-minute chart. Nice uptrend. We have pulled back. We're seeing a small bullish candle setting up very close to our moving average buy zone. And you're a very aggressive trader and you want to trade this potentially to the upside. Why is it an aggressive trade? Well, we are definitely overextended on the next higher time frame. So this is a reason why I personally wouldn't be taking that trade. However, let's just see how easy it is to put on that trade using Nadex contracts. And I'm switching here over to my Nadex platform. And guys, just if you have signed up for a demo account or for your live account and you have forgotten your credentials, how to log in, you see here this forgot your login details. Just hit that button, and if you've forgotten your username or your password, you're back up and running within less than a minute. You can receive an email, change the password or log in username, and you're good to go. No need to call the help desk, only if it's really only in case that you forgot both your credentials. And yeah, you just log in, and that's how easy it is. Now let's have a look at the contracts here. You see that price has started to pull back. And we are looking now here at forex binaries. We are looking at the US dollar against the Canadian dollar. And let's just have a look here at the daily 3 p.m. And you can see that this contract here now has about 2 hours and 42 minutes left until expiry. If you think, we just saw the small bullish candle here before, and this is one of the reasons why I never want to trade of a candle that hasn't stopped printing yet. I always want the candle to finish, because what looked like a small bullish candle here definitely is now a very big bearish candle. And so you see, you want to wait for this candle to finish, next candle to start, and only then do you put in your order. Now, we don't have the luxury of this time. We have only about 12 minutes left here in that session. So let's just assume I think this pullback might be over. I'm looking here for potential buying opportunity. How could I be buying? Well, I could be just looking, for example, at this contract here. Now, and I could be buying this contract, let's say one time. Now, what is it that this contract represents? I'm looking here at a binary contract for a strike price of 137.40. Looking at the chart, this is where 137.40 currently is. This contract will settle for 100 if at expiry, which is in 2 hours and 40 minutes, this contract will be trading, or the underlying market, the US dollar against the Canadian dollar, will be trading above this strike price. Then this contract will settle for 100. Now, I could be buying this contract now, let's say 2 times. And what is my maximum risk that I have here? My maximum losses, I'm paying now $30 per contract. So my maximum loss would be I'm losing everything that I've invested in that trade. When will I lose that money? I will lose that money if the market is trading below 137.40 at expiry. Now, 2 contracts. I just put on the trade here, place the order, and you see the order is live. Now, I've just talked about how much risk is it that I do have. What is the potential profit? Let's have a look again here at the risk. sorry, that was the risk that I talked about. What is the potential profit? Well, if I'm buying now this contract or those two contracts for $67, what are they settling for? If they're trading above the strike price, each of those settles for 100. 2 times 100 is 200 minus those 67, which I just paid. So my maximum profit is 133. Now, what's my reward to risk ratio on that trade? I can make potentially 133 bucks for a maximum loss of 67. This is round about a 2-to-1 reward to risk ratio. And personally, for my trading, I like my reward to risk ratio to be definitely greater than 1-to-1. Why? It just doesn't make sense for me to risk $50 for an opportunity to make maybe only 10. I always want to have the potential to make more, or at least the same thing than what I'm risking. What's the probability that this is going to be a winning trade? Well, this winning trade, potentially winning trade, you can think about the mid price of the bid and the offer as a rough probability that the market will be trading at the strike price or above the strike price once expiry is there. So if the market is currently trading 26 to 36, this means that the mathematical model, the statistical model for pricing those options gives me round about, not exactly, just a rough number, round about a 31% chance, just the mid price of those two, 31% that this could be a winning trade. So the price tells you the probability or a probability estimate, and you get the reward to risk ratio here from looking at the max loss and the max profit. You want to balance the probability that this is a potentially winning trade with the reward to risk ratio. You want to keep some harmonic balance there. It doesn't make sense to have a 16-to-1 reward to risk ratio, but just a 5% probability that this trade is going to work out. This should all be in some kind of meaningful and sensible relationship, if you know what I mean. All right, so this is a long trade now. Now, on the other hand, you could be saying, wait a minute, this is still looking bearish, and I don't think that we will be trading here within 2 hours and 37 minutes. I think that the market might be pushing actually lower. And I think short term, we're going lower. So I've switched now to a shorter term contract, and you can see this one here is only trading for about 36 minutes and 50 seconds. And if I think price might be going lower, I might be inclined to have a look at this contract here. And the strike price is 137.19, which is just below here, the 137.20. If I think the market is going lower and hit this level, I could be just selling 2 contracts here. My maximum loss, 30.50. My maximum profit, 169.50. I'm just placing that order, and you see the trade is live. And I think if the market might be going lower, it might pause there and then start to continue back up again. And the idea how this could be traded, for example, could also be to say, okay, I want to buy at least one of those 2 contracts back, and I don't want to pay 93.25 right now, but rather I think when it's trading at this level, it should be trading pretty close to 50. Why? Because if an option is trading at the money, the delta of that option should be pretty close to 50. And you can think of the of the current price of those contracts here pretty much like the delta of a conventional plain vanilla option. So if I put in an order here to scale out of that position to close, no, sorry, I want to trade just one, and the price should be 50. This would have almost been a fat finger mistake. One contract for a price of 50, and I'm just putting that order in. And you see, it's not executed because the market isn't trading there. But if the price should drop lower and hit this level, and that order becomes actionable at a price of 50, I would be scaling out of that position and take partial profits, and so I've taken some risk off the table. So just 2 ways to potentially trade this move right now. And you see, just looking at the 15-minute chart, please understand I don't think that this is a great trading opportunity right now, because here on the next higher time frame, the 30-minute chart, we are still overextended, and for that reason, that's not the trade. Harpreet is saying we are buying this trade, but RSI MACD is showing downwards. First thing, this has not been a perfect buying or selling opportunity either way. It was just a means of demonstration. However, looking here at MACD, we are not looking if RSI is in overbought or oversold territory. We are not looking if he has started to pull back now and is about to cross its trigger line. The only thing that we want to do is, if we compare this high in price here with the high that we saw there, you can see price made clearly a new higher high. And if we compare at the same point in time the value of MACD with the value of MACD when we made a new higher high in price, MACD also made a new higher high, and that's convergence. That is what is important for me when looking at MACD and RSI, and the conventional interpretation about the histogram and crossing the signal line and overbought, oversold signals in hindsight. If it works for you, by all means, keep using it. For us, we found if we use them as leading indicators instead of lagging indicators, that this is more beneficial to our trading. All right, so that's US dollar against the Canadian dollar, and I want to very quickly, we just have about 4 or 5 minutes left, have a look at the indices. And just a quick trick here, we'll look at the indices now again on our daily chart, and let me just zoom out here a little bit. You can see that the S&P 500, the futures, moving sideways, pushing higher again. Clearly, we had a lower low. We are now seeing a higher high. If this qualifies as a low, then it's an uptrend again. But overall, we are back again here in our trading range. And for that reason, it's currently not really that, I'm not really that excited about the S&P 500. The 20-period moving average still is above the 50, so we haven't seen our fanning pattern yet. So all this here in the S&P 500 looking pretty weak. Now, that's just the S&P 500. Maybe the Russell is performing better. Let's have a look at the Russell. No, it doesn't. You can see immediately that the Russell, yes, it's broken above this line, but it's immediately come back to test this line. And honestly, I don't see that much momentum in this market to say, oh, now this has been the breakout and now it's up and away. Of course, it could happen. I don't know it, nobody knows, and I just don't see it here. However, if we now have a look at the Nasdaq, I hope you can immediately see how this picture looks completely different and what's going on there. Also, we can see here a trading range, but since then, fanning pattern in our moving averages. Clear, strong push higher. You can see that MACD clearly is making new higher highs compared to the previous ones. RSI clearly is pushing higher. So of those indices and markets, Nasdaq currently definitely the strongest. No setup there yet, because we have to wait to see, at least in the daily chart, for a pullback here to our buy zone. It's not there yet. Let's have a look at the shorter time frames. And you can see that 8-hour, 4-hour, 2-hour charts are looking pretty nice. Actually, this could have been interpreted as a potential buying opportunity here on the 2-hour chart. 15 minutes and 30 minutes, somewhat no man's land. Now, I just want to give you this short idea. You don't have to just build candles based on price. You can also build candles based on transaction. And this is called a so-called tick chart. And what we're seeing here on that screen is one candle represents 150 transactions at the exchange in the underlying market. And here one candle represents 300 ticks, 300 transactions at the exchange. What would be the use case to use those tick charts? Well, Nadex contracts are usually contracts with a rather short-term expiry cycle, up to a weekly contract, but usually you're looking at more short-term contracts. And when the markets are moving and moving fast, very often you don't see those pullbacks into the buying and selling opportunities, those pullbacks to the moving average buy and sell zone. Perfect example would be any central bank decisions or elections of any kind. Usually the market is then moving very fast, and even on a 5-minute chart, you don't get those pullbacks that you're looking for. That's when I'm switching to those tick charts, because on those tick charts, we get those pullbacks. Those tick charts are reacting way more faster, and if all your time frames are always overextended from the moving average buy sell zone on those other charts and time frames, looking at the tick charts usually is very beneficial and gives me those opportunities that I'm looking for. Again, it's not a time-based chart, it's a matter of transactions, and if the market is moving fast, those 150, 300 transactions, of course, fill up quite rapidly. Marlene is asking, do you like the 20-minute binaries? Personally, I'm getting a little bit old, and this is why I like to pick higher time frames and give my trades more time to work out. It just depends on your personal style of trading. I have colleagues which are very much into those faster time frames and those ultra short expiry cycles. Personally, for me, I definitely prefer a little bit slower things, but that's just me. You have to keep in mind, there is not, you have to trade this market to be successful. You have to trade that product to be successful. You have to trade that expiry cycle. It depends on your style of trading. You have to find something that works for you. So it's not, if people tell you you have to day trade, no, to be successful. No, it's just not true. You have to be a good trader. You have to be a consistent trader. And usually it's easier to become a good and consistent trader if you're starting on the higher time frames. And if that's your game, then you can start to drop down to the lower time frames and make it more faster and more exciting. So Marlene, I hope that answers that question for you. All right, guys, time's already up. So let's just quickly jump back here to the slides. And yeah, I've shown you the way I look at the markets. I've shown you the way those markets could be traded with Nadex contracts. And I would really love if you said, wait, looks nice, I would like to learn more about Nadex. Why not sign up for that demo account, get started there. And remember, what I'm giving you here today during those webinars is only a very brief and rough introduction to our trading strategies. You can learn way more about those trading strategies in our advanced education package, which is completely available for you here at Nadex for free. You could visit our Trade with Position homepage, have a look around, and would discover that we will sell those packages separately. However, this would cost you around about $900. Why not save those $900, get exactly the same content here at Nadex, and rather use those $900 to fund your Nadex account and get started trading both binaries and spreads. If you have questions considering today's webinar, just let me know and I'll answer those questions in just a few seconds. If you have any questions towards Nadex, then please, by all means, there are multiple ways to be in touch with the good guys at Nadex. And yeah, ask your questions, and I'm more than happy to help you on those. That's it pretty much for today. I hope you enjoyed today's session and you learned a little bit new and found the session itself useful. As usual, after this webinar, there should be a short survey, and any feedback that you do have for us is really appreciated because we're running those sessions for you. We want to create value. We want you guys to say, this has been a half hour spent very well, and yeah, I'm becoming a better trader. So that's our intention, and if you have anything in mind that helps us to achieve that goal, please, by all means, let us know. I don't see any further questions, so thank you very much once again for tuning in and attending. And now, everybody, have a very great day. Happy trading. Take care. Catch you next time. Thanks again, and bye-bye.